Good morning, everybody, and welcome to this DDEX webinar on the digital sales reporting and claim and detail message standards. I hope you are all remaining safe and well in these rather weird times. My name is Mark Isherwood, and along with my colleague here, Niels Rump, we will be presenting the webinar this morning. And as I said, the focus is on two standards, the digital sales report and the claim detailed message, which, as you will see, act as a pair, as it were, in managing a series of processes relating to the exchange of royalties, ultimately, between rights owners and users of those rights, mainly DSPs. This is our first round of webinars that we've done, so it's very important to us that you ask questions. If you can do that using the chat, as one of us is not speaking whilst the other one is, we can keep an eye on the chat if there are any questions. Obviously, we hope you'll find this is informative, but it's going to be important because this is our first webinar series to get some feedback from you. So after we have finished, I will be sending out a link to a very short questionnaire, just 5 quick questions, which are designed to try and gauge your views on how well we're doing. But as I said, if you have any questions during the seminar, or the webinar rather, please use the chat, and we will endeavour to answer everything. This slide just shows the series of webinars that we've got. The two that are relevant, if you like, for people east of London, because they're at this time of the day, and therefore later on in the day for those of you who live east of London, are on the 11th of June, when we will do a seminar on the recording information notification standard, and then the 17th of September, when we will do a webinar on media enrichment and description standard, or MEAD. The other webinars are placed at a time which is essentially for companies west of London, although those who are in continental Europe will be able to join those as well. It's just once you get any further east than that, it starts to cut into your evening rather badly. So, as you know, DDEX is a standards development organization focused on delivering standards for primarily the music industry, and primarily, although not exclusively, in the context of digital. However, for those standards to sort of create a whole, if you like, with a W, that enables efficient communication, there are usually 3 elements to what we do. There's the basic format, which is essentially the order in which the fields appear in a message. And there will sometimes be linking between those in terms of the data that gets populated in those fields. There's then choreographies, which is really setting out a series of trigger points for when a message needs to be sent, and that may also include a trigger point for when a message should be sent back. And then finally, the protocols by which the actual messages get exchanged. Primarily over the last 10 years, certainly, that has been by secure FTP, but increasingly our standards are turning towards web services as the protocol for the exchange, as we look to do more and more in terms of pure automation rather than using human beings. So this is a full sort of, it's based on the London Tube map, and it's been quite helpful in getting people to kind of understand a little better where all our standards are. And obviously, there are several. We now have 8 families of standards altogether. But the focus you will see in the next slide is on these 2 standards, the DSR and the CDM. And these are primarily exchanged between the players that you see here, the rights owners, record companies, music publishers, authors, rights societies, sometimes distributors, and the rights users, the DSP. So that's the focus of what we're going to do today. So one of the things that is worth pointing out to everybody is that the thing that underpins all of DDEX is our data dictionary, which contains all the semantics of all of the terms that we use, and the structure of what we call common composites. So you will not be surprised. Something like sound recording is obviously a composite, which has a number of data fields associated with it, and it's a common building block for the way in which it appears within all of the different messages, and it is the sort of beating heart of DDEX in the way we develop our standards. As I mentioned, really the heart of DSR and CDM is enabling the exchange of royalties. We are not in the business of dealing with the royalties themselves, just the data that allows everybody to determine what those should be. So the purpose of the DSR messages is to allow licensees, usually DSPs, to report sales usage and, if relevant, revenue generated from the use of sound recordings, which embody both sound recordings and of the musical works that are embodied in them. And obviously that is sent to various licensors, sometimes called rights controllers. And then the CDM standard is there to allow the licensors of musical works only to make claims against that usage, sales and usage information to the licensees, and to invoice the amounts due in accordance with the level of sales and usage. So that's those are the sort of purposes of the 2 sets of standards, and as you can see, they are a kind of pair. One is data coming one way, and the other is data coming back the other way. And so you can see this very clearly from the sort of principal messages that exist. On the DSP side, the sales report message is basically from the DSP to a rights controller or administrator, or licensee to licensor, depending on which language you want to use. And then the CDM, the claim detail message, is basically data coming back the other way, based on the data that was initially received in relation to the sales report. In terms of formats, the DSR comes in 2 formats. When we first created the DSR, we used XML. We were at that time very much in a download world, and it was fit for purpose in terms of the world we inhabited at that time. But as soon as streaming started to come on board and other forms of exploitation, XML became massively verbose in terms of the size of the files against the amount of data that was actually being exchanged. And so we introduced, probably about 8 years ago now, the flat file version, and the CDM also comes as in the flat file format. The XML is actually gradually being phased out as it becomes less relevant in terms of usage. And the sort of arguments, if you like, between XML versus flat file variances, on the business side, there's obviously a lot more flexibility to report multiple business models in one report. It's a lot simpler for senders and receivers to understand, and significantly cheaper to implement and maintain. As I mentioned, the XML files have just become way too big, and the flat file versions with the same data in it is 5 to 10 times and sometimes more smaller. The other thing, and I think one of the key points here, was that in order to process an XML file, you needed to ingest the whole thing before you could actually do any processing against it. Whereas the way the flat file has been designed, there are discrete pockets of data, if you like, so you can actually start processing it as soon as you start ingesting the file. You don't have to wait for the whole thing to be ingested first. And as has been proven, the flexibility it has in terms of evolving the format has been extremely valuable. So for the technical basics relating to the flat file, obviously it's a TSV file. We have two delimiters, the first one being the tabulature and the second one the pipe, and there's an example of the Lennon and McCartney, is an obvious one, and the limiters can be escaped. It's encoded in UTF-8, which means it can handle all scripts and languages. And essentially, the flat files are structured. Although that is not always the case, but most of the time. And the structure is built around different records for different entities that exist within the business environment we're looking at. So releases, which some people call products, and obviously equates to albums in some instances. Resources, sound recordings or videos, musical works, the sales and usage information, the claims, and so on and so on. And I think now I'm going to hand on to Niels, who will actually go into the detail of these, which will actually show some of these different records and how they're structured within the different profiles within the two families of standards. So over to you, Niels.
Thank you very much, Mark. Welcome from me as well. And again, if you have any questions, please do ask. Please use the chat function, and we will hopefully be able to answer them. So we now know the context in which the DSR standard and the CDM standard is being used, and the standards are being used. They are used quite a lot in Europe, but also in other continents, between DSPs and music rights societies and music publishers. The overall structure of the flat file is, as Mark said, it's a structured flat file, which sounds a bit like an oxymoron, but it does make sense, as you will see in a moment. The standard itself defines different types of records, and a line in a table for us is what we call a record. And we have header and footer information that basically says all about who sends the file to whom, what is the sales context in which something has been provided, and those kind of stuff. That's part of the header, the footer, and the summary records. And then you have the release and resource records that describe the musical works and the sound recordings that are being used. And then last but not least, you have sales usage records, which then basically say how often, in what sales context, has a specific sound recording and therefore a musical work being used, and how much revenue was generated on the back of that sale or usage. Quite important is that every single line in the report or record in the report contains its own identifier. That has two reasons. The first is for internal reasons, because there are points where you need to point from one record to another record. I'll show that in an example in a moment. But secondly, and maybe even more importantly, you need to point from a claim detail message to a sales report message, because if someone wants to make a claim on a specific musical work being used in a specific sound recording in a specific sales context and provide you with invoicing information for that sales usage event, well, at that stage you need to be able to point to precisely the right record in the sales report. So that's why we identify specifically the sales and usage records to enable that to happen. And the other thing that's quite important with this format is that the records are grouped into self-contained blocks. They describe all that is necessary for the processing of a set of sales and usages that relate to one either release or resource. You only need to process that thing at a time. Once you've processed it, you can then move on to the next one, either generate the next one for the next release or ingest the sales and usage information for the next one. This, as Mark already explained, hugely differs from the old XML format, where this information about what has been sold and how often it has been sold was smeared all across this file, which could have been 60, 70 gigabytes. And you had to basically process the entire file into some kind of staging tables before you could do anything. Well, the flat file version basically already provides the staging tables built into it. And this is how it looks in a diagram. You have a header record at the beginning, who sends it, when, to whom, a footer record, which basically just ensures that whoever receives the file knows that they have received the entire file. It's basically just a couple of numbers, how many summary records, how many blocks, and so forth. And then you have these self-contained buckets, blocks we call them, that contains all that information that's necessary. When it comes to those blocks, though, there are two different ways in which you can handle things. And it depends on your business circumstance which of those two ways you want to choose. Either you can make sure that each block comprises of a single record. And we call those the single record block variants, or SRBVs. So this one long record then contains which resource is used, which release is used, in which that resource was a part of, the work that was in effect actually used, and sales usage report to a music rights society or music publisher. That's, of course, the entity that counts. And then how often and for what price and so forth. But this means, of course, that if you have, for example, a 10-track album and all the 10 tracks have been used, that the release information has to be repeated at least 10 times. And that is fairly inefficient. So we have also what we call a multiple record block variant, where each block comprises of multiple records. One that describes the release, one for each of the resources of that release, one record for each work used on that release, and then you have the sales and usage information for the release. And that means, for example, that the release information only needs to be provided once for the entire block. But it's also more complex to ingest. And that's why we've made the choice to offer both variants as part of the standard, at least for some of the business cases that we're dealing with, to enable specifically smaller companies with less IT capabilities, but also companies where the catalogs are smaller, where there is not that much problem with repeating data. Well, they can use the single record block variants. But if you have a huge catalog and you have the IT capabilities to deal with structured flat files, at that stage, we would recommend to use the multi-record block variants. So, here is an example of a file. And because this is slightly too small for you, I've just blown it up and just look at the very left hand. This is how a sales and usage report looks like. It's an old sample, but it doesn't really matter because that it's old, because the principle still applies. The colors in here are solely for presentation. There is no importance from the format to the color. It just makes it slightly easier to talk about this file. So let's talk about it bit by bit. The first bit that falls out is these lines which are in bold, which of course also is just for presentation and discussion, not in the format. It's an ASCII file or UTF-8 file without any structure other than the different columns that are being presented here. So here are those lines that all start with a hash symbol or pound symbol, as it's called in North America quite often. Those are commentary lines for human readability. They basically are just containing the names of the rows for each of the different record types. So if you're looking at, for example, the header and the footer line, you can see, let's use the footer because that's nice, short and sweet. You have number of lines in the file, the number of lines in the report, the number of summary records, the number of blocks in the file, and the number of blocks in the report. And then at the very last line, at the very bottom, you see that there are 35 lines in the file and in the report. The standard allows reports to be split over multiple files if they become too big. Therefore, you have this difference between in file and in report. You have one summary record in here, you have one block in here, and slightly embarrassingly missing, the number of blocks in the report should also be 1. So there's one missing in this file. And then at the very top, you see the header. It gives you the version of this message, the profile, the version of the profile. So this is a basic audio profile, version 1.1. You have a message number, when it was created. If you go further to the right, you have who sends it. So that's this 77777X, which is test company. It's an ad-funded service, and it's been sent to the company 88888X and so forth. I'm not going to go through all of those records. That is something you can have a look at on the website when you want to study the standard, just giving you, if you like, the highlights. The next bit that is worth looking at is these summary records. The summary records basically provide two functions. The first is, well, they summarize the information, so the recipient can easily understand how much money is actually involved in this report or a section of the report. And the second is it allows you to define a sales context, the commercial model and the use type and the territory and the currency in which something has been used. So you can very well imagine a multinational DSP using different models of exploiting musical works and sound recordings, you would then have multiple of these summary records, one for each territory and currency and type of exploitation that you have. One line for downloads in France, one line for streamings in the UK, and so forth. So in this case, the summary record is uniquely identified by number 1. That is in the second column. It's a distribution channel from test company. They have their own identifier. It's a pay-as-you-go model for a permanent download in France. So those are basically that defines the sales context. And then the body of this report is the block, and this only contains one block because we just don't have enough real estate on the screen to show more here. So in dark blue you have the release that the DSP has, in quote, sold, and with selling we mean any kind of exploitation, of course. In red or pink or whatever color you want to call that, you have 15 tracks that are on that album, and those records not only contain the information about the sound recording, but also about the musical work that has been used and that is on that sound recording. Then there are 3 what we call sub-releases, which are basically for services like Complete My Album, where a user has purchased, tracks 1, 2, and 3 from an album, and now they want to purchase the rest of the album, and some DSPs have offers for that to basically complete the album so that they don't have to purchase those tracks that they've already purchased as individual tracks beforehand, that they don't need to do that again. And then at the bottom you have sales and usage records. And that's how it looks like. Now, let's go over some of those individual cells and areas in this report. The first is on the left-hand side, the second column. There's lots of ones there. That's just the block ID. That basically means that all of those RE, AS, and SU records, they all belong to the same block. That means that this block of, that's about 30 lines, I guess, or 25 lines, they can be processed on their own. It is more or less self-sufficient. There is nothing that the rest of the report, with the exception of the data from the summary record that this points to, that needs to be held in memory to completely process this set of the report. And that's what makes this format so nice and easy to deal with. Secondly, this area. Let's first look at the green numbers in the RE02, these sub-release records. You see on for example, looking at the last line, 11 pipe 12. That's one of those cells that contain multiple data elements. And the last line there basically says that there is the sub-record comprises of the sound recordings 11 and 12. And that's the Symphony number 10, Opus 93, 2 Allegro, and the Chamber Symphony Opus 110A, 3 Allegro, because those have the resource ID 11 and 12 in the, no, I can't look. 11 is the 24 Preludes and Fugue, Opus 87, and 12 is the Symphony number 10, Opus 93. So those are the ones that this sub-release comprise of. And then in the lines, the sales usage lines underneath that, you see that, for example, the last sales usage record, the release with the number 19, which is this last RE02 record, that has been sold or used or distributed. and it's being distributed under this business model of permanent download in France as a pay-as-you-go model, because they all those sales usage records reference the summary record number 1. And the last thing that is worth looking at here is this strange AS02.01, and it's the only bit here that has this .01 suffix. When we develop the standard, we have a set of requirements, and we then develop record types to deal with that. And initially, we had a record to describe assets or resources, which we called AS02. There's also an AS01, but that is for a slightly different use case. So we had an AS02. Over time, we learned of new requirements, so we updated AS02. But we need to differentiate that new AS02 from the original one, and we do that by adding this prefix, AS0201, and the next version would be AS0202, and so forth. And that way, we can very easily make sure that every profile version, remember at the in the header we say which version of each of those files, points to a exact version of one of those record type definitions. And as I said, that works quite well. Now, the music industry, as we all know, is a fairly broad church when it comes to different types of exploitation of musical assets. And we had to provide 7 different profiles to deal with all kinds of different ways of exploiting music. There's the basic audio profile that deals basically with your downloads and streams of audio files, music, as well as music videos. There's a profile that deals specifically for user-generated content, one that deals with audio-visual material other than music videos. We have one that deals specifically for royalty reporting rather than usage reporting, one for broadcasting. We have one that deals with financial reporting to record companies. All the other profiles are targeted at music rights societies or music publishers, but this profile is for financial reporting to record companies. And then there is this Masterlist Profile, which allows communicating information about sound recordings and musical works before actually sales and usage information are available, for some kind of pre-usage claiming using the CDM standard. I'll come to that in a moment, but before there was actually any usage being recorded. Some of those profiles exist in multi-record block variant and single record block variants, and the label reporting format, the profile for financial reporting to record companies, that's only single record block variant. For that one, there is no multi-record block variant. Because there are so many different profiles, we had to split the whole thing into multiple parts of the standard, different documents, because it was unwieldy to have it all in one part, if only to allow, I don't know, the basic audio profile to be updated because we need to cater for a new business requirement. That should not necessitate the update of all the other profiles because they are independent of each other. So we put all of those profiles into different standards. That's parts 3 to 7 and 8 to 10 as things stand at the moment. And then there are 3 what I would call general parts. One that defines the general architecture, what are the basic data types, what are the delimiters between cells, what's the delimiter within a cell, what's the file naming convention, and all of those kind of things. there is one part that defines all the code lists or allowed value lists that we use to identify whether something, for example, is a sound recording or a music video, whether we're talking about mechanical rights or performing rights, whether we're talking about type of content that is being used. Those kind of things are coded in allowed value sets, and that's what Part 2 defines. And then Part 8 is by far the largest part that defines all the record types there are. And it's quite a long one, because for those 7 different profiles with all different reporting needs, we had to come up with quite a number of different record types. So let's quickly go through those profiles. Not want to go too much detail here, because otherwise we'll be sitting here in 3 hours' time. The basic audio profile, it contains sales and usage for albums and singles and music videos and those kind of material. And then there are these sub-releases for unbundled tracks as well as complete my albums. And the structure, as you see on the right-hand side, you have of a block. All the diagrams that I'll show you following now is just the block. So I'm ignoring the summer records as well as the header and footer, which you would always need to imagine around these blocks. You have the head release, which is the album that has been traded with all the resources that are on it, which can either contain work information, writer, ISWC, and those kind of stuff, or it may not contain that directly because, for example, you have a medley where there are multiple musical works involved, in which case you put the musical work into a separate record so that you don't need to duplicate that information. And then you have sub-releases, as I've explained earlier, for unbundled tracks or for complete my album kind of scenarios, and then the sales usage information. And those dashed and dotted lines that you see there, that's all those inner block pointers that can exist in order to basically describe the structure of the block. So the sub-release number 1 is basically comprising of the 4th and the 2nd resource, whereas the sub-release, the second sub-release just contains the resource number 1. And then the sales usage, which can either point to a sub-release or to a head release. And you can then understand what's going on. DSPs may not actually have release data. In that case, well, you don't have a head release. You don't have the context or the concept of a sub-release because there is no release, in which case you simply have a block comprising a resource and sales usage line, or a resource with a musical work lines, and then sales usage lines. Quite a simple setup with very little pointers going up. The only pointers that you have here that bind things together is that they all have the same block ID. Audiovisual profile looks more or less the same, with the only difference being there's no musical work being described. There's a cue being described as obviously for a audiovisual material. I think we need to move on a little bit because we need to get on to the other standards. So let me just quickly touch base on the Masterlist Profile, which comes off will be interesting when we're talking about CDM. Again, you would have a release, and you have then different resources, either with or without musical work information provided as in the basic audio profile. And then you have this master list record, which basically provides information of how a DSP expects such a release or a resource rather being used. This then allows the receiving licensor to prioritize how to process and provide claims back to the licensor. And last but not least, as I said, we have the financial reporting to labels, single record block variant only, and allows reporting of sales usage to record companies, as the name suggests. It's not intended for marketing reports, so it's not that detailed when it comes to reporting where and who downloaded material. That's DSR. There's obviously much more to talk about it, but that's DSR at a high level. When we now get into CDM, where the purpose is for licensors to provide a response to such a DSR in order to either identify rights claims or to do that and then provide invoice details relating to such claims, and for licensees then to go back to the licensor and saying, hey, I think there is something fishy here. There's something not quite right. We call them discrepancies because we don't know yet whether they're actually conflicts or whether the licensee actually may have made a mistake. And there are two different types of discrepancies that you can think of. One is a suspected overclaim, when a licensee has received 150% of claim for a specific sound recording from different licensors, or where there's just something off with the maths, or where the royalty rate that has been applied seems to be not in accordance with the agreement between the parties. It's clear that those two standards, because they work so close together, need to have consistent semantics, which is why we actually use the same set of code lists and allowed value sets as DSR. So the CDM standard doesn't have its own allowed value sets. It's the same set that the DSR uses, so we don't copy it, we just point to the DSR standard there. And we have this clear linking between sales usage lines and claim invoice lines, so that we can make sure that that when you receive a CDM message, the recipient knows exactly which DSR line this is with respect to. And of course it uses the same architecture as DSR. Just one small change, well, the file naming convention is slightly different, but otherwise it's basically the same. And like DSR, we have different profiles. There are basically two different approaches in which you can report claims and invoices. The first is post-usage, and the other one is pre-usage. Post-usage, that's claims and or invoice information. Pre-usage, that's in response to the Masterlist Profile in normal circumstances. That means there are no sales usage information available yet, therefore you cannot make any invoice details. So that's a different approach. You then can also correct either of these reports, and then you can report discrepancies and overclaims. And these are then put into three different parts of the standard for exactly the same reasons as we've split the DSR standard into multiple parts. And of course we also have those general parts, the architecture and the record type definitions. In this case they're in part 1 and 2. And as I said, the allowed values are defined in DSR, not in CDM. How does a CDM file look like? Well, you will not be surprised to hear that they have a header and a footer, which are more or less the same as used for DSR. They need to be slightly different, but the principle applies. The header tells you who sends it to whom and when, and the footer tells you how many lines and blocks and so forth are in the report. You then have a summary record, which basically gives you information about what is contained in that claim message. And then you have financial summary records that provide you, at least in a post-usage claim scenario, for different types of rights holders, what the financial impact of those claims would be. How much basically the licensor is expected to to pay. And then you have the details. The details, they then describe resources, the works, the rights claims made for a specific territory, for a specific right, for a specific time, and then the invoice details for that. And then there are some auxiliary records. I'm not going to go into those here because we just don't have the time. If we're looking at the pre-usage claims, well, it looks very much the same, except there is, of course, no financial information available, so there can't be a financial summary, and the detailed records does not contain any invoice details. Otherwise, it is virtually the same. When it comes to correcting a claim, the approach, though, differs from the one used in DSR. In DSR, if you need to correct a sales report, you basically send the sales report again. In CDM, well, we have a special format for it. It basically, because some of the results of an invoice specifically may be that royalties have already been paid out, and DSPs may now need to revert some of those payments, or both parties need to revert some of those payments. It's not just sufficient to correct something. You actually need to send the old data as originally advised, the new data as now is thought correct, as well as the difference. This now gives both parties exact plan on how to reverse which payments and how to deal with this correction. And the choreography looks quite complicated, I agree, but it's actually quite simple. The licensee on the left-hand side for these overclaim discrepancies just detects overclaim discrepancies after they received things like a CDM message. They think there are two parties in this case involved in claiming more than 100% for a musical work. Therefore, they send basically information about this overclaim to both of those parties. They then look and check and make sure that they only claim for whatever they claim. How that is done is outside of the scope for DDEX. That is any company's prerogative to do how they want to do that. And then one or both of them will send a correction to their original claim. If licensor 1 claimed something but they don't own it anymore, well, then they will send a correction which reverses all of it, for example. But if maybe they now only own 50% and not 75%, in that case, well, they will correct that in that way as well. And when we're talking about the record discrepancies, it's kind of the same thing, except that there are only two people involved. The licensee who finds there is something wrong with, in their view, something with a claim or the invoice, they simply send a complaint, if you like, and then the licensor can analyze that and can react by correcting it, or by not correcting it if the licensor finds that there is nothing wrong with what they've done. That's the whistle-stop tour through CDM. I don't have any more things to say, if you like, but if there are questions, I'm, of course, more than happy to answer any of those.
If there are no questions, then we will conclude. Okay, well, obviously we've explained it very clearly. That's good to know.
Or completely unintelligible. That's also.
Okay, well, look, thank you all for attending this webinar. As I said, we will email you a link to a very short questionnaire to get some feedback. That's also an opportunity, if you do think of any questions subsequently, that you can actually record those, and they will be. We will try and answer them. The email will also point you to the place where the slide deck and the recording of this webinar will be made available. Obviously, that will take a couple of days to get up there, but the whole thing will be available online on the main DDEX website. But that will all be in place, all be obvious in the emails I send round. So thank you all for attending, and of course, please all stay safe and well. Thank you very much. Goodbye.
Thank you very much. Bye-bye.